Chapter 3, Problem 4, concluded. We left off having done the chart with all the transactions on it, and I drew your attention to the fact that we know that there's going to be a statement of cash flows. So these two transactions, 2 which has $900 going out, and 5 which has $8,100 coming in, are the ones that we're going to have to talk about. So here's the one where the cash is going out, and here's the one where the cash is coming in. They didn't ask us to do that yet, but you just know that they're going to. The first thing they ask us to do is to prepare an income statement. Well, an income statement is revenue minus cost of goods sold, gross margin minus operating expense, net income. So, we can do that. The net sales, and all the numbers we're going to use, we can take right from here. Net sales, then we have freight. So we have net sales of $90,600. You see where that comes from. Then we have cost of goods sold, and the cost of goods sold altogether comes to $54,000. That's the 58 that we sold minus the 4,000 that we took back. So our cost of goods sold is 54,000. Our gross margin is 36,600. That's just a definition. Cost of goods sold minus or subtracted from net sales. 36,600. Now I want to draw your attention to the net sales, because I kind of jumped over that really quick. It's 9,600 is the net sales. Remember, sales altogether was 99,500, but we took $5,900 of stuff back, and we gave them a $3,000 credit. So we started out with 99.5, but we gave them 8,900 back. So the amount that we sold and kept sold is 90,600. I jumped over that a little quick, so I apologize. Remember, net sales is everything you sold minus what you took back, minus whatever discounts or allowances you gave. Now our operating expenses here, I think the only operating expense they give us is the transportation out, which is $900. Now remember, $900, and I'll put minus signs around this so you see it. Remember, transportation out is an expense. If we had to pay the transportation to get the goods in, that would be added to the inventory. We had a homework problem like that. So when you do this math, 36,600 minus the 900, our net income for this period is 35,700. Go back to our account and check. Does it work? Yes, it does. 35,700. So there's our income statement. Keep in mind, the business doesn't own that. That is owned by the shareholders. That is the equity that is accrued, gathered, belongs to the shareholders. So let's take a look at their balance sheet. Their assets. What do they have in assets? In this case, their assets add up to their cash of $120,100. They have their accounts receivable of $9,600, and they have their inventory of $32,000. That's their three assets. So we'll add those up: $120,100 and $9,600 for the receivable, and the merchandise inventory is $32,000. So our total assets, when we add those all up, is $161,700. Remember, when we're all done, this number will equal that number. Everything we have, who owns it? Insiders and outsiders. This is the balance in balance sheet. Our liabilities here are zero. They didn't tell us that we owed anybody any money. We didn't borrow anything. We didn't take anything. We didn't sign any notes, any mortgages, anything. So what we have is this right here, our common stock and our retained earnings with the new amount added. So our common stock is $60,000, and our retained earnings, the new amount, is $101,700, and our total liabilities and stockholders' equity, $161,700. So our balance sheet balances. Now, you should not be shocked by the next question that says, oh yeah, and while you're at it, do a statement of cash flows. We can do this easily, especially since we didn't have a whole lot of cash that happened. We had $81,000 that came in from customers. Okay, and we had $900 go out for the shipping. So our total cash from operating expenses was $80,100. We had no cash from investing activities, so we don't have anything to handle there. And when we look at our financing activities, we didn't sell any stock, we didn't take any mortgages, we didn't take any notes, we didn't sell any bonds. So we had no cash from operating activities. So when we're all done, we have our beginning cash right there, $40,000. So that was our beginning cash. Our change in cash from operations is $80,100. You add those together, the ending cash balance is $120,100. And unless we screwed up, that should be at the end, at the bottom of this column, and it is. So you see, all these pieces do fit together. It's just a matter of going through them in order, doing it piece by piece, line by line.